Okay, once again, I'd like to welcome everyone to today's TradeStation webinar. My name is Andrew Rocco. I'm the Senior Manager of Educational Content here at TradeStation. And today's webinar is called Introducing Eurex Micro Futures. Before we jump into that, I want to let everyone know that today's presentation is for educational purposes only. If you have more questions about that, you can go over to youcantrade.com for additional disclosure information. And I want to remind our viewers, if you're looking to up your trading education, find online coaching sessions, platform training, pretty much anything you can think of as far as trader education, I encourage you to check out the TradeStation Masterclass, which is hosted on youcantrade.com. And there's no one better to talk with me about Eurex Micro Futures than Eugen Mohr, who's the VP of Equity and Index Sales of the Americas at Eurex. So I'm just going to bring up Eugen's slides here, and we will let him take over here.
Hello, good morning, Andrew. Hello, everyone out there. And yeah, thank you for giving me and us, Eurex, the opportunity to speak about our newest product innovation that we have launched in May, just a few months ago. And yeah, we're happy that we can partner up with TradeStation. I mean, TradeStation is a prominent partner in the trading industry, especially on the end client side. So yeah, we're very happy to have the opportunity to share our information and to share our product news with you guys. Thank you much. Yeah, maybe to myself, my name is Eugen Mohr. I'm working with Eurex now for 14 years. I was initially working out of Frankfurt. Eurex is a German company, Deutsche Börse Group, and I'm now in the United States, in Chicago, now for 3 years, and covering there the equity index sales team, and also a sponsor of the Micro Futures, which we launched shortly. Yeah, maybe Andrew, when you can switch to the next slide.
Sure, and I just want to remind everyone, if you have questions along the way, feel free to enter those into the chat, and we'll try to get through as many of those as possible. Okay, go ahead.
Of course. Eugen. Yeah, thank you. Before we start with the introduction on the micro futures, maybe a little bit about Eurex. Maybe some of you are not aware of Eurex or not fully into Eurex trading. As said, Eurex is a German company founded about 30 years ago and is part of the Deutsche Börse Group. We are headquartered in Frankfurt. Eurex 30 years ago was a kind of startup. I mean, today you would call it a startup. And it was founded under the name Deutsche Terminbörse, DTB. And maybe interesting for the investors to know, DTB was the first fully electronic trading platform in the world. I mean, back in the days, I mean, in the US, we have CBOT, we have CME, where at those days, there were only open outcry trading, so pit trading. And Eurex started in the 90s as a kind of pioneer in the way of electronic trading and launched its first fully electronic platform. And over the last 3 decades, Eurex developed to become one of the biggest exchange platforms in the world. I mean, I said Eurex is the derivatives arm of Deutsche Börse Group. Deutsche Börse Group itself is the mother company, is an exchange provider, service provider, which covers all areas. So the whole value chain of the trading industry. So that starts from pre-trading, like market data services and things like that, over a trading venue. I said Eurex is one part of it, but it's also included cash market. So Xetra is a prominent name where you can trade stocks and bonds and so on. But it's not only trading and pre-trading, it's also post-trading, which includes clearing services and risk services. And also another important piece of the Deutsche Börse universe is the so-called custodian. So when you have stocks, derivatives, futures, options in your portfolio, that these positions also will be stored at a custodian. So Deutsche Börse Group is like the whole construct in one thing, and Eurex itself, as said, is one piece of it. So Eurex is the derivatives trading arm of the exchange. At Eurex itself, I mean, one of our benchmark products, and that's what we're talking about today, is the DAX index or the EuroSTOX index. But we're a pretty diversified exchange, so it's not only equity products, it's also fixed income products. At Eurex, for example, you also can trade fixed income futures. We have the German Bund future, Bobble future, Schatz future. So we're covering the whole investment landscape of the European Eurozone. Another important piece is the volatility trading, which also becomes more important. FX is on our platform, and also commodity trading has been developing pretty well in the last days. As said, the exchange itself, Deutsche Börse Group, is a full exchange with all the services. I think important here on this end is also to mention that the exchange has the clearinghouse, which is called Eurex Clearing AG. And here the clearinghouse, and I think this is an important factor when we talk about listed futures and options, follows a so-called CCP standard, which is a central counterparty standard. That means when one party of the trade gets into default for whatever reason. I mean, in 2008, we had the default of the Lehman Bank, and Lehman was on the counter side of the trade and what went into default. So all the trades which have been taken place went also into default. So that at the end of the day lead then to the big financial crisis. So that's why also here Eurex was a pioneer in developing things like that. A central counterparty always guarantees that all trades, all positions that have been traded will be cleared, but will be also delivered. Even if one party of the trade gets in default for whatever reason, the exchange stands in between and guarantees the delivery of the trade. That's just a side note here about Eurex. Eurex itself, as said, we're from Europe, but we are connected to the whole world. I mean, the major part of the business is still coming from Europe. I mean, Germany, of course, but also UK is a big partner, France, Italy, Spain, and so on. But the US is a growing part in our business. That's also a reason why I'm in the US covering investment firms over there. I mean, the US, of course, is the biggest investment market in the world. Therefore, we are having several entities in the US, and another part in the regions or in the world, which is becoming more and more important, is the Asian region. So overall, Eurex started as a small startup firm, has developed over the last 30 years to become one of the biggest trading venues, trading platforms in the whole world. That's, I would say, in short, about the exchange itself. And now we switch over to why we are here today. As said, Eurex was always an innovative partner in launching new products and bringing up new products on the platform. And the latest one, as said, is the so-called micro futures. On the micro futures itself, I'm coming later on and explaining on what products we have the micro futures and what's the specifics on the micro futures. But before we start with the micro futures itself, maybe a short explanation on what is a future itself. Maybe also here just a quick overview. I mean, a futures contract is typically a bilateral contract between a buyer and a seller to sell or to buy a predefined underlying, in our case, for example, the DAX or the EuroSTOX, to buy and to sell for a predefined price with a predefined expiration into the future. So this is the standard setup of a futures contract. How can you use it, or what do you need? As said, the underlying is an important piece when you set up a futures contract. As said, in our case, it's the DAX or the Euro STOX, but of course you can develop or create futures for all kinds of underlyings. No? I mean, it can be single name equities, it can be fixed income products, but it can be also commodities. So I think that's an important piece. As said, a future always has an expiration date and has a kind of settlement type. So at Eurex, the future contracts have, and this is the standard in the industry for financial futures, have 4 expirations per year. That's typically the months is March, June, September, and December. And futures expire then on the 3rd Friday of the respective months. And specific of the contract then as well is the contract value and the minimum price change. So also here, the exchange has hundreds of futures out, but for the micro futures, we have a reduced value and we have a reduced contract size, which makes this product then, and we come later on it in more details, so interesting for private investors. How can you use a future? I mean, of course, you can use it for investing, so buying and selling, so kind of speculating with the market, but you also can use it as an hedging instrument for an existing portfolio. Also here, some more details later during the presentation. And why should you use futures? I mean, a future is a leveraged product, so you only need to pay not the full price to purchase or to sell a certain product. You only pay a leveraged price of the product, and therefore this makes the whole future trading construct more cost efficient for investors. Another important thing is the liquidity. At Eurex, we make sure that we have always liquid order books during the day. So micro futures are almost tradable 24 hours a day, and it's available from Sunday evening US time until Friday afternoon. I said almost 24 hours a day. And the last point, as already said, I think it's an important factor, the central counterparty, so that if in case someone of the market participants gets into default, it's always guaranteed by the exchange that the contract is delivered. Yeah, that's a short wrap up about what is a future in general. And then maybe we switch over to the next slide on the underlyings. Underlying. So we have we launched, said in late April, we launched 2 or 3 micro futures, and I would like to talk about today about two underlyings. So maybe we start with a German icon. Let's put it that way: the German DAX index. German DAX. What is the DAX? DAX is the leading German equity index, which consists of 30 companies. In the DAX index, there are firms like SAP, Linde, Siemens, Allianz, or BASF. I mean, you could imagine when you think about Germany, you only speak about car makers. I mean, Mercedes-Benz, BMW, or Volkswagen. They are part of the DAX, but it's not only about German car makers in the DAX index. So the DAX index itself is a pretty diversified portfolio. So we have all kinds of sectors in the DAX index itself. So we have chemicals, we have industrials, we have insurance, we have software, we have pharma and healthcare. So the index itself, it's not only about car makers, it's all about German engineering and all about German companies. As said, when you look at the current composition of the DAX, we have 30 firms or 30 companies listed in the DAX, and these 30 companies summarize about 75%, 74% of all German companies' aggregated market capitalization, which are listed at the Frankfurt Stock Exchange. So the DAX, in summary, the DAX is the the summary of the 30 biggest companies in Germany. What this is in numbers, when we take all the market capitalization of the DAX 30 components, we're ending up with round about 1,200 billion euros, which is a big number, I would say. The DAX itself is an index, but the DAX itself also is an interesting investment product. And we're having about 150,000 financial products on the DAX. So that could be on the one hand side, that could be a future, like as we introduced it with the micros, but that can be also so-called certificates or warrants, which is a specific investment vehicle that is available in Germany, in Europe. So given the prominence of the DAX in the investment world, there are a lot of investment products. As said, 150,000 financial products are based on the index, and that's considered, I think, under the top 5 investment products in the whole world. So yeah, that's a short wrap up on the DAX. On the next page, we're then switching over to the Euro STOX, which is our second underlying on micro futures. The Euro STOX is technically the same as it is the DAX. The difference between the Euro STOX, it's not only on German companies, it's also on European companies, and it concludes the 50 biggest or 50 largest and most liquid companies in the Eurozone. In the Euro STOX are companies named like LVMH, so Louis Vuitton, ASML, or also SAP, Linde, or Sanofi. So also here, the index itself, Euro STOXX 50 index, is a very diversified index. Also here, we have all kinds of businesses in the index, as said, technology, consumer, chemicals, healthcare, banks, and so on. Yeah, and it reflects, and here the market capitalization is even higher. It reflects almost 3 trillion euros market capitalization. So it's covering the top firms in the European zone. Also here, when we look at the free float, we're having about 60% free float market cap of the Euro STOXX total market index. Also here, I think a very, very big component. Also, the Euro STOXX 50 index itself is a very prominent investment product. So we're having about 30 billion euro worth of ETS on the index. So I mean, that's another example how important the Euro STOXX is in the trading world. Yeah, if we don't have any questions on the DAX or on the index, I would then switch over then to our products that we have. Or yeah, maybe one thing, when I'm seeing the slide in front of me, I brought an overview about the underlying and how the underlyings have been performing. So I said we have the DAX and the Euro STOXX, and maybe one thing to mention here is that the index calculation between both indices is different. The DAX index is a so-called performance index, and the performance index is an index which reinvests all the dividend payments. So if a company pays its annual dividend, then this dividend amount will be reinvested into the index and will be then reflected in index points. Compared to the Euro STOXX, which is a so-called price index, here the dividends will be not invested into the index, and therefore there's always a kind of differentiation between the performance of the indices. So when we look at the DAX and the Euro STOXX index, we see not a similar development. I mean, even if the correlation between both indices is relatively similar, we see that the DAX is performing a little bit better. Why is this the case over the years? That's, as said, because the fact of the performance index situation, and that also means that over the time, the DAX performance index is always in total index points higher than the Euro STOXX point. So even if the market goes sideways, the invested dividends will always add up into the index point levels. And that's why we're having now an index point level in the DAX of about 16,000 points. And therefore makes, and this we will then see when we look at the future index itself, makes it necessary or made it necessary to bring a smaller contract. Yeah, that's about the differentiations between the indices. And now we can switch on to the next slide on the futures itself. I mean, Eurex already has for 20 years had a DAX future and also had a Euro STOXX future, and both future contracts have been very successful. I mean, in the Eurex, this is the most traded future contract at Eurex. The Euro STOXX, they're trading about 1 million contracts every day. And also the DAX was also a very frequently traded futures contract with about 100 to 120,000 contracts. So we can see here Eurex has an established future product on established and well-known indices, but why we have been bringing a smaller micro contract. So the idea, the concept of the micro contract was when you trade, for example, the DAX future, the DAX future had a multiplier of 25 euros per contract. That means when you buy one DAX future contract and the index goes up 1 point or goes up 1 point, goes down 1 point, the price change is always 25 euros. So when we now look at the price level of the DAX, which is about 16,000 points, and we take the contract value of 25 euros per index point, then we're ending up with a notional value of the future contract of about 400,000 euros. So the DAX, and this is also a reason because it is a performance index, over time has become more and more expensive in terms of notional value and more heavy. Yeah, and this also had an impact then on the margin rates. So because of the increasing price level, also the margin rates went up for the DAX index. So therefore, the idea was to bring contracts with smaller contract size. So we started 6 years ago with a mini version of the DAX. There we reduced the tick size to 5 euros per index point, from 25 to 5 euros. And also here, I mean, when we trade the mini DAX, it has a notional of about 60,000 euros now. This was still too much for some of the investors. And therefore, and this was then the next evolution of the product, we launched the micro future with an index value or a tick value of 1 euro per contract. I mean, we can see here the development from 25 euros to 5 euros and now to 1 euro per index point. That also makes it easy to track the contract value and the performance of the product. I mean, as I said, the index is around 16,000 points, equals 1 euro per point, and then we're ending up with a notional value per contract of 16,000 euro per contract. Same logic was for the Euro STOXX 50. Euro STOXX 50 is about 4,100 points. Also here we had the existing Euro STOXX future with a value of 10 euro. So we started with a value of 41,000 euros per future, and also here a subsequent margin requirement. And yeah, as said, given this high notional values and to make it easier for private investors to trade in smaller clips or in smaller sizes, also here the idea was to reduce the tick value to 1 euro per index point. In the presentation, you see a tick value of 0.5 euro, but that's the fact because the Euro STOXX is now trading not in 1 point anymore, it's trading in half a point. Yeah? But important thing is for both contracts, the index value is 1 euro per index point for the DAX and €1 per index point for the Euro STOX. I mean, as said, it's a standard futures contract with 3 available expiries. It's the quarterly expiries, as said, March, June, September, and December, and it expires every 3rd Friday of the respective months. DAX expires at 1 p.m. Central European time, and Euro STOX expires at noon, 12 p.m. European Central Time. As said, trading hours, it's available almost 24 hours a day. So we start trading at 1 a.m. Frankfurt time, and we trade until 10 p.m. Frankfurt time, which is 3 p.m. Chicago time. And this is available for both contracts. Yeah, that's in short about the product itself. On the next slide, we brought some stats with us. I mean, as said, we launched the product end of April. Yeah, we started with a small amount of trades, but now over the months we see a continuous growth. And in August, we're having now traded about 10,000 contracts a day in the DAX and about 1,000 contracts a day in the Euro STOX. But more importantly, I think, is the fact that we see a very improved order book. In the beginning, the DAX spread was about 4 to 5 points, but now because we have incentive schemes for market makers, and we're having now 6, 7 market makers in place who trade and quote the DAX, we're having now a spread of about 1 point in the DAX and 1.5 points in the Euro STOXX. So over time, more and more participants, and I think this is a good view of the success of the product. More and more participants are joining the product, and therefore more liquidity comes into the product, and also the spread becomes way more tighter, and is almost like the same spread as the existing product. So we're seeing here a very a positive development in the product itself. How is the account distribution on the product? We're seeing a healthy mix, I would say. So I said we have market makers on board. We said we have like 7 or 8 market makers who are quoting this. They make about 60%, 70% of the trading volume, but we're also having end clients and private investors here trading this product, which is around about 30%, 35%. So we're having a healthy mix between professional investors, market makers, and end client investors coming through via broker flow. I think also here it shows the success of the product so far. Yeah, that's about the latest development of the product. On the next slide, I'm bringing an example on how the price is changing. I mean, this is the logic of a futures product. When you buy or sell, you're either speculating on that the price goes up or the price goes down. And how does this work? Let's assume I'm having a bullish idea of the market. So in that case, I would go long with the futures contract. Let's assume we're buying, in our example, we're buying a futures contract at a price level of 15,500. So we need to pay the margin. And let's say we're buying 1 lot. Let's say our estimate is going the right way and the market goes up. And on the next day, we're having a price level of 15,600. So what is happening with our position? So when you go to a broker and you buy the trade, you're having the position in your portfolio, your 1 DAX, mini micro DAX future long. And what's happening with your cash amount? So I mean, you're paying initially the margin, and then at the end of the day, the broker looks at the margin and sees, the index is 100 points up. 1 index point is €1. Then your profit, your unrealized profit is 100 euros. 100 point times one point, 100 euros. And then the broker looks at it and says, okay, you have paid whatever amount of margin. I think in our case, it's 1,200 euros margin. And then the end client for his position gets a credit of 100 euros. Let's say the next day the market goes down to 15,350 points. So we're falling below our entrance level. That's 15,600 to 350, 15,350. So we're having a loss of 250 points equals 250 euros. And also here, the broker will then calculate this with your margin in your system. And then, and so on and so on. And then when you close your position, at the end of the day, it will look, okay, how was the position on the previous day? And how is the position on the closing level? And then here's again the differentiation between the settlement price of the respective day and the closing price. And then your margin will be adjusted. And when you close your position, you will get your margin back. That was just a short example on how the price movement and the P&L of a futures contract works out. On the next slide, we're having a hedging example, but I think, Andrew, you're also talking about what you can do with the future. So therefore, I would skip this example and would go on the final slide from my end to summarize the advantages of our micro futures. Yeah, I mean, first advantage is the fine-tuning of the index exposure. I mean, as said, you can use the futures as an hedging instrument. So therefore, with a smaller lot size and with a smaller notional of the contract, you also be able to hedge your portfolio on a more granular level. This is one of the important selling points. Another selling point, I would say, with trading in futures and having a reduced investment because you only pay the margin, it's a more cost-efficient way to access the European market. I mean, as I said, the DAX and the Euro STOX represents the most liquid underlyings in Europe and in Germany. So, so the second selling point I would say is the cost efficiency, and the third selling point, which I would like to emphasize, is the liquid order book. I mean, as I said, we're available almost 24/5. And we're having liquid order books, so you can buy and sell all the time. And yeah, I said it's always guaranteed and it's always safe because of the central counterparty of the exchange behind it. Yeah, this is already my piece of the micro products presentation. If there are any questions, maybe we can talk about this now, or I'm handing over to Andrew for his part of the presentation.
Thank you, Eugen. I'm just going to get my slides going here. Everyone could be patient for 1 minute. Okay, fantastic. So thank you for that, Eugen. I'm going to put a little bit more emphasis on putting the micro futures into practice here. So Eugen covered which ones we have. We have the Euro Stoxx 50 and the DAX micro futures. Again, one of the huge advantages is the contract values, which are 5 times smaller than the mini contracts and 10 times smaller than the normal contract. So it's going to give our investors at TradeStation access to the largest and most liquid companies in Europe. And you're also going to have that flexibility for your portfolio. So some of the main advantages, as Eugen mentioned, are hedging tool. They're very cost efficient. They're liquid. You can really build your portfolio in the way you desire with the size of the contract and then the overall access for both US and European investors. So let's talk about gaining access. So what I've found is markets tend to be mean reverting in nature. What I mean by that is sometimes US stocks will outperform, while other times European markets will outperform. So what this does, and what famous investors like billionaire Stanley Druckenmiller talk about, is some of their success is being attributed to being able to trade whatever market is in play. Rather than looking for a trade, you're having those trade setups come to you. So as a trader, you never want to simply trade just because you only have access to one market. You're going to gain more access with these markets. There's no need for individual stock selection. So if you're looking to benefit from trading these European stocks, you can gain that exposure, that aggregate exposure, without having to worry about individual stock selection. You don't have to worry about downgrades or earnings reports. You're just trading the market as a whole. And the cost efficiency is major advantage of trading these. By having access to Eurex Micro Futures, investors are able to construct their portfolios as they wish. As I'm sure most of you know, risk management and portfolio construction is paramount in trading. So investors can now get involved in these markets by risking the precise amount they wish with whatever position size they desire. So you're not going to sacrifice access to these markets, and you're going to be able to trade the size that you want. I'll talk about that a little bit more later in the presentation. And commissions and execution costs on these products are very low. So by trading a futures contract, you can take advantage of that efficiency. You can participate in these markets with low cost while trading the aggregates. And again, as I mentioned before, you're going to eliminate that single stock risk, like earnings leaks, analyst downgrades. And shorting futures is also another key advantage. If you go to short sell a stock, you have to borrow those shares, and you're not always able to get a share borrow, but you can always short futures contracts. And liquidity. So as a TradeStation Futures client, you will have access to both the Euro STOX 50 and the DAX. As Eugen mentioned, Euro STOX 50 has some of the most liquid stocks, including stocks from Germany, France. It includes juggernauts from other countries such as Italy and Spain. And as a US or European investor, you will gain diverse access to these countries. The DAX provides some of those larger German companies, 30 of them. Also, one point I want to make is German elections are coming up in late September. So investors who gravitate toward event-based trading can look to trade the volatility surrounding this event. And investors who are trading the US market around the US elections will remember how many opportunities kind of in both directions that event offered. So event-based traders definitely want to be looking forward to possibly trading those German, or trading around those German elections. Also, you're going to have access to some of those large companies like ASML, the chip maker, Louis Vuitton, L'Oreal. So all companies we've heard of, but that trade on European markets. Okay, so on to hedging and diversification. So you're going to be able to diversify your assets, not only internationally, but the type of instrument you're trading. Let's say you're trading just a lot of individual equities. You'll be able to spread out your assets a little bit more, and you'll be able to trade 21 hours a day. With the contract having that multiplier of 1 to 1, you'll be easily able to find where you stand in comparison to the index. And also, if you're a US investor, you have the ability to take advantage of these new markets. This slide I want to show you because it's absolutely kind of critical to pay attention to your equity curve. You really want to do the best to have a smooth equity curve, like is shown on the screen. You want a nice steady climb up as your account grows. And one way to do this is to hedge using futures. So for me, I like to risk no more than 1% of my assets on any given trade. By doing this, I can go on a long losing streak without blowing up my account. I also don't want to be positioned too heavy in one market. So futures can allow me to diversify first and foremost. Second, you're going to have a little bit less correlation. So if you're trading all US stocks, if you start to trade European markets, you'll get that added advantage of having a little bit less correlation, and you can help to smoothen that equity curve. And then one other thing I wanted to mention, you can look at this. This is just an arbitrary chart of an index. But one thing I want to mention that I like to do with futures is when you see an index get a little bit stretched from a moving average, in this case, that blue line is your 50-day moving average. What I'll sometimes do if I have a heavy long portfolio, of individual stocks and I don't want to lose my cost basis, I have some nice gains going, I want to protect my cushion in these stocks. What you can do is as the index gets extended from the moving averages, I'll take a small portion of my portfolio, maybe 20%, and I'll short the index futures. Now, what that allows me to do is I'll keep my individual stock positions, I'll keep that cost basis, but as the market pulls in, as I think the market gets stretched, and markets tend to act like a rubber band around those moving averages, as they get stretched, they tend to pull in, I'll be able to hedge myself to the downside. So I'll keep those positions, I'll keep my equity curve nice and smooth. Maybe I won't get all of the gains I would have had without hedging, but I'll have the ability to sleep at night and I won't have to worry about my portfolio blowing up. So that's just one way. Everyone trades differently, but I just wanted to give you guys a real world example. That's how I'll use index futures to hedge my equity portfolio. And again, position sizing. If you're trading with large contracts that are too large for your portfolio, they're taking up a ton of margin, you're not going to be able to put the correct portfolio risk management in play. So these futures, these micros, they're going to give you the ability to position your portfolio in whatever way you wish. So seasoned traders, they give deep thought, not just into what they're buying, but how their portfolio is constructed. What size am I taking in each position? And you want to be able to maneuver in whichever way you see fit. And of course, ask yourself what would happen in a worst case scenario. And as I mentioned, I prefer to risk 1% per trade. And I'm looking for about a 3-to-1 reward to risk. And again, this is just me. It's going to be different for everyone on the call, but I'm just giving you some examples here. So for example, this chart shows column 1 is going to show your hypothetical risk per trade, while column 2 is going to show your hypothetical reward. And then column 3 shows the win rate needed to break even. So what I have found is that batting average, if you're thinking in baseball terms, for example, batting average is less important than slugging percentage for most traders, meaning you want to risk a small amount to potentially win big rather than just to be green on every trade, for example. So if you're risking 50 to make 1, of course, you're going to need a 98% win rate. I don't know many investors who are getting a 98% win rate, but if you slide down here, if you're trying to make $3 for every dollar of risk, you only need a 25% win rate. And most people are surprised that a lot of trend followers, they only get the bat on the ball about 25 to 30% of the time. So if you're positioned properly, and these micro futures allow you to position properly because they're small, you can take on those smaller trades. You can afford to be wrong a lot as long as your risk management is in place and you're letting your runners win to the upside. Okay, so I just want to talk quickly about how you can access these on TradeStation. You can access them on web trading platform and mobile. You do have to have a futures account. We have low commissions. And I think someone was asking earlier, what are the symbols? So the symbol for the micro DAX is going to be FDXS. And for the micro stocks 50, it's going to be FSXE. So if you have any issues accessing that, you could always call our client services, but you can access those across all TradeStation platforms. Thank you guys for tuning in. I did want to get to a few questions here. Eugen, I'm going to ask you a few that I saw come through. What is the margin rate for the micro DAX and the Euro STOX 50? That was one question.
Yeah, I mean, for the DAX, we are around about. I'm speaking now from the exchange margin, from the overnight margin. I mean, you as a broker can then set individual margin, but from an exchange perspective, overnight margin for the DAX, it's about 1,100 euros, and for the Euro STOXX 50, the overnight margin from the exchange, it's even lower. It's around about 305, 310 euros per contract. I said this is exchange margin, and the broker can set individual intraday margins or overnight margins. So that's then on the discretion of the broker.
Fantastic. And what's the volatility of the DAX and the Euro STOXX 50?
Mm-hmm. That's a very good question. I mean, obviously, volatility is a very important factor when you trade. I mean, volatility summarizes the ups and downs of an underlying, and is reflected in the historical volatility. And then, besides the historical volatility, you have the implied volatility. So this is the volatility which is implied by the market participants. And at Eurex, we have two separate indices on volatility, which reflect the 30-day implied volatility of the DAX and of the Euro STOXX. It's for the Euro STOXX, it's the so-called VSTOXX. The VSTOXX, we also have a separate future on it, the VSTOXX future. And for the DAX, we also have a separate index. It's the VDAX, Volatility DAX Index. And both indices, I mean, we are now in a relatively low volatility level environment. Both indices right now are around 16 to 18 points. Just as in comparison, I mean, in the US, there is the so-called VIX, the VIX index from Chicago Board of Trade, CBOE. And the VIX is a little bit higher. I think it's also about 18 points, 19 points. And that's the implied vol on the S&P 500. So the European and the US volatility right now is about the same level, between 16 to 20 points, let's put it that way. To bring this in a little bit into a context, last year during the height of the pandemic, in February, March 2020, we had the highest volatility levels ever in the past, since historical all-time high. And there were the volatility levels around 80. I mean, 80 from 80 to 16. But that also implies then, of course, a trading opportunity. I mean, of course, when we're having higher volatilities, then we're having higher or more opportunities on the upside, but also on the downside. So that's something which always needs to be considered. But to go back to the initial question, the volatility level right now is around 16 to 18 points.
Okay. And Ralph is asking, is the current TradeStation ticker for micro DAX front month FDXSU21? And yes, that is correct. That is the front month ticker for the DAX. It's FDXSU21. What is the correlation between DAX, Euro STOXX 50, S&P? Okay.
That's another good. You want me to answer or?
Yeah, go ahead.
Yeah. Another good question. I mean, both indices, DAX, Eurostox, and S&P 500 are equity indices. So when we're talking about equity indices, correlation typically is always relatively similar. But given the fact that we have that we're talking about different regions, I mean, we're talking about Germany, Europe, and we're talking about the US. There are some differences. So the current the 3-month correlation between DAX and S&P 500 is about 0.65, and we see the same for the Eurostox versus the S&P 500. Also around about 0.65 correlation between those two indices, or the 3 indices. So that, on the other hand side, gives us then another opportunity. No? I mean, you could technically trade US versus Europe and trade the spread, and that would be then also influenced by the respective correlation. So and you mentioned it before. I mean, in September we have the German election. So I mean, that could also impact the trading behavior between those indices. But go back to the question, it's around about 0.65 points.
Perfect. And someone is asking, you mentioned you like to short futures when indexes get stretched. How do you define stretched? So this one's for me. What I would say is it's going to depend on the index that you're trading. For example, if I'm trading the NASDAQ, I've found that about 7% above the 50-day moving average is when things tend to start pulling in. Doesn't mean it always happens. You might find a different number, but what I'll do is I'll just start to look left on the chart. If you just study past instances when the market gets stretched and kind of do the calculation of where was the index when right before it pulled back, where was the 50-day moving average or whatever moving average you're using, you're going to start to see patterns. So again, it's not something that's going to work every time, but it's used to kind of protect your portfolio. And for me, it allows me to sleep if I have a lot of long equity exposure on. Getting another question here. How many hours a day can I trade these futures? What hours are they open? Eugen, I think you mentioned that in the presentation, but can you just touch on that one more time for everyone, please?
Yes. So we're available for trading 21 hours a day. So we start trading Chicago or US time 7 p.m., 8 p.m. Sunday night. And then we have a 21-hour session. So we close the next day, US hours, 3 p.m., 4 p.m. And then, I said we're reopening again at 7 p.m., 6 p.m., 7 p.m. And until Friday then at 3 p.m., 4 p.m. US hours again. So we're, to make it short, 21 hours a day, 5 days a week.
Okay, fantastic. Well, we're getting low on time here. I hope everyone enjoyed the presentation. Eugen, thank you so much for joining us. I do want to encourage anyone, if you're interested in learning more about the data feed or where you can find these tickers, and you didn't find it in this webinar, I would call TradeStation Client Services. We will be putting a recording of this webinar up onto the TradeStation YouTube page. Once again, Eugen, thank you so much for joining us, and everyone out there, thank you for attending the webinar. We hope you have a great day.
Thank you.
Thank you.